Today we're going to take a look at Abercrombie and Fitch, currently selling at $72, $3.4 billion valuation, from an all-time high of $186 from last summer, currently down 61%. They did execute one of the most dramatic turnarounds in US retail. They improved their cash flow with aggressive buybacks happening right now, which we'll go over. The current financials and valuation ratios are below sector medians, especially because of all the tariffs happening. Is this stock undervalued relative to its peers, even after the significant outperformance that already happened? Let's go ahead and check it out. If you're new to the channel, guys, hit that subscribe button. So we're going to go ahead and pull up the fundamentals real quick. On your right column will be Q2, the latest earnings that they posted. $1.2 billion in total revenue, up 6% year over year. They are currently sitting on 7 consecutive quarters of year-over-year total revenue growth. They also posted $2.97 in earnings per share, which is up 14% year over year. So it's looking pretty good on the top line. When you go down to the profit margins, they are hitting 62%. Now it dropped a couple basis points comparing it to the second and third quarter of 2024. As we go down onto the cash flow, this is probably the reason why the stock price has done nothing but crash this year. Take a look at free cash flow per share. On the latest free cash flow per share, they posted $1.07, down 55% year over year. They're currently sitting on 5 consecutive quarters of free cash flow per share declines. Remember, in the long run, companies track free cash flow per share, and just look at this mess that's happening. The previous quarter, before Q1 in the beginning of this year, we saw a massive fall in their free cash flow per share in Q1, down 200% year over year. And the main reason why they have posted this negative free cash flow per share, we'll go ahead and go down to the free cash flow per share. And as you can see right here, in Q1 of 2025, this was the first negative cash flow that they posted in the past 2 years. And this was primarily due from aggressive share repurchases and capital expenditures. Let's see the capex they spent. They're spending about $50 million, despite posting record net sales and solid profitability. So if you go up to this cash flow statement, take a look at this. $234 million they spent. This is cash flow from financing activities. This $234 million was allocated to share repurchases. This resulted in a total negative free cash flow for the period, as capital returned to shareholders and reinvestment activities outweighed cash inflows from their operations. So if we go, let's go ahead and check out Q1 of 2025. So this is Q1 of 2025 in the beginning of this year. We used our strong balance sheet to return $200 million to shareholders through share repurchases. This reduced Abercrombie's cash reserves significantly. They went from Q4 of 2024 having almost $900 million in cash down to $600 million. And so from the beginning of this year, the cash allocations with these share repurchases has not really been a great move because the stock keeps on falling. But besides the share repurchases, the company is also remodeling store locations, using $31 million for investing activities. This all reflects ongoing expansion and upgrades to their recent stores. But as of right now, liquidity still does remain pretty strong. $600 million in cash, and they have 0 long-term debt. And so the negative free cash flow in just that quarter alone, remember, this is the reason why the stock came crashing down this year, is because of this huge free cash flow per share drop. But the negative free cash flow in that quarter doesn't really necessarily reflect operational weakness, but rather the capital allocation strategy that Abercrombie is currently using and investments to drive growth and return capital to shareholders. Remember, the more shares they repurchase in the open market, the smaller that pie gets, and if you're a long-term investor, the higher your ownership becomes. Let's go ahead and check FinViz real quick. Shares float, 46 million in shares, so super low amount of shares. 46 million in shares float. Insiders own about 2%. No major insider buyers. Institutional holding has come down, and so Abercrombie is currently again sitting at a 60% discount from its all-time highs. It is pretty much now selling at the same prices it was selling at in 2023. So if you are a fan of Abercrombie, now is your chance to get in before things turn around. If we go ahead and take a look at the latest Q2 2025, so this is the latest earnings they just posted, they are still continuing their share repurchases. Since the start of 2022, the company has repurchased 10 million shares for approximately $600 million. At the present moment, the company has $1.1 billion remaining under its current share repurchase authorization, announced March 2025. So they have $1 billion left they're going to use to buy back shares. Abercrombie is a money machine right now. They're generating so much cash and they're just repurchasing all their shares. But besides the share repurchases, they do have multiple partnerships, some with big names, and the big one is NFL. They are an official partner with Abercrombie. They do have some pretty nice things recently on their website. Looks like they are releasing limited collections now. Limited collection of timeless Western pieces that brings together the rich heritage of both brands. Abercrombie is making moves. And last but not least, guys, Abercrombie Kids. So they are also expanding Abercrombie and Fitch Kids. They have launched globally in department stores now, including Nordstrom's and Macy's. So that would be another huge income stream for Abercrombie. They also own Hollister, which targets the Gen Z, 13 to 21-year-olds, 511 stores globally. And last but not least, guys, they opened 13 new stores in Q2, and they have an additional 14 store openings planned by the end of this year. So they are still currently expanding. They're making some new partnerships with the NFL, and with the stock price currently down 60% from its all-time high. But with Abercrombie's blend of cash, high margins, huge buybacks, they still stand out as a retail winner. If you guys want to play it a little bit more safe, I would wait until they resolve some of the tariff issues. But once the White House and China solve these issues, all these retail stocks are going to go shooting up like crazy. You're not even going to have time to buy. So you have to position yourself before a trade deal happens. So Abercrombie and Fitch, guys, $72, $3.4 billion valuation. That's a pretty small number compared to some of their competitors and peers. Down 60% from its all-time high. Let me know what you guys think in the comments below. Is this company undervalued? Once again, thanks for watching this video. And if you're new to the channel, don't forget to like, subscribe, and we'll see you in the next one.